G'day all, Ben here from East West. We're going to have a look at gold in this video. I'm not going to make it as long as the last gold video, but I'm just going to jump in here and have a look at what happened this week. So here we are with gold, and last week we were looking at how the market was beginning to struggle with these wicks through this area, and as since we rejected weight quite strongly. Now, just going back and looking at this is why sometimes the RSI is good to look at, because this is starting to tell you, okay, especially between as we start to make a peak here and the RSI is dribbling away, we are beginning to make a higher high, or we're beginning to make highs without the momentum of previous moves. So out of gas, that's just what it's telling you. Be very, very careful. And the fact that we got this and we started to diverge away, the market started to struggle, was a warning shot that we might get this strong move back down, which is what actually played out. So just here on the hourly, we're talking about last week how this was the area. Remember, we went back to the daily and we looked at this area where all the wicks were, where the market was just rejecting, right? So we were observing the behavior here, and this of course was the Israel-Iran spike, which very quickly gave up. And what did we see off here? Well, pardon me. Well, we were talking about that we came up here, we tested the retracement, that if we broke that, then all of a sudden, you can see here where we had a couple of wiki lows where the measured move would have come in. But the problem for this market here, I think for me, and probably what's happening at the moment, is that as you start to follow the measured move cycles down, so this was like the first sort of measured move. So just let me just replay that for you really quickly. So this was the first swing back up to the retracement, and the measured move came down here. So this becomes our next top point, and we start from here. But as we drag down to each pivot low, the market is just not retracing. There's no retracement coming in whatsoever until we get to sort of this point where we're at now. And what's happened off here as we drag across, we've just come up and hit the retracement. Okay, so this, can you make an Elliott wave case for 5? I mean, a lot of people don't like Elliott, and I'd advise, I don't really like to use it in terms of things other than stock indexes for reasons I'm not going to go into. But even if you come off here, we haven't made it back. So what you could sort of say here, just in nuts and bolts TA, is that this is still valid as potentially a bear flag and leaves the path for gold lower open. So I suppose you could make the case that you go wave 1, wave 2, a nice wave 3 down here into the zone, the crappiest wave 4 you've ever seen, and maybe some sort of way to jam that into a 5. Like I said, I'm not really going to go into that Elliott side of it, because I don't think it's applicable to what we've got. But what we do have here is we've got a divergent bottom, okay, very slight. We're on an hourly, and that is definitely some sort of impulsive, strong, trending move. And what's coming off it looks pretty crap, right? I mean, it's not a trend you would hang your hat off, but it is a nice forming trend. Like it's got symmetry, but it's not got a lot of power, I wouldn't have thought. And we've sort of just peaked out here in the RSI. And to me, I think this just remains in danger, okay, of going down further. That's the way I read it. So what's happening, which is kind of interesting, is last week we kind of, it was just a hypothesis. I wouldn't have said that whatever was happening I mean, this is sort of rangy sideways markets, but all I did was just, denote that as the low and that as the high. And whether or not you can seriously call that a trading range, I don't know. But an interesting phenomenon did happen. Now, we just missed it, but this sort of stuff happens pretty often. But I think I suggested if we break this range, we'll quickly traverse 100% of if this is a range. And look what we did. Well, look where this market stopped. It's kind of spooky, isn't it? You just sort of see this stuff happen fairly often, which is why I like to pay attention to it. But you call this the broad range of gold, and we just very quickly accelerated away. So I sort of see this and think, oh, okay, well, I'm not getting too excited just yet. But the next sort of thing that I would be looking at, I mean, we know we've got, I'll just mark them off for argument's sake. We know we've got 200% of the range, 300% of the range. Okay, so I'll just remove that, and this is what I would just expect, what my expectation would be. So, you know, I've got this move down, I've got this dribbly correct, I've got a strong move down with a dribbly corrective looking move back up. What would be my expectation? Well, quite simply, I would just be thinking about a very simple 1-to-1 move, or AB equals CD, whatever you want to call it, but just an equal leg down. And lo and behold, look where a 1-to-1 move takes us. Okay? What can you say? I mean, and you know, there's more you could do off that. You could probably find more levels of confluence, but you can just see how that goes together, right? That just looks like that is just a standard technical corrective move. Okay, a move down, a 50% move back, a 1-to-1 move back down, and what does it do? It expands that range that we're looking at 200%, almost exactly. Now, do I know that's going to happen? I don't know. It just, this time it's played ball, but you know, why would you ignore something that's giving you something very precise like that? Okay, you could probably even this might be a bit too well, because it's corrective. I think what we're basically doing here, right, is we're correcting this move. That's the general premise. So when you're sort of looking at something in a correction, when you're talking about pitchforks, you can probably go to a shift, something more like that. The ideal thing would happen would be that. Okay, that might take a bit of time. That would be the point of call. But I think the overall thing here is that this, I mean, you can put all this on, but to me, this, right, this area at the bottom of this, and that would line up almost exactly with that, by the way. Okay, so you got some more confluence there. That would be an area where I'd be certainly paying attention, and I would be a little bit hesitant to be going short there. I certainly wouldn't want to put a stop there. Okay, I would not stop out there if I was long. If I was long, depending on where I was, if I was long, I'd either be stopping way before or way after, but that's just a bad place to stop out. Okay, it's just a high probability that that's where the market wants to pivot. I mean, we're a little bit away. I mean, we even talked about this, right? We even talked about this peak, okay, is coming in. You see how all this is just lining up? Okay, now, you could probably even, you know, if you started to move this, and you would find one of these pivots lines up exactly as well. So it might be coming off there. And if you, well, look, let's, for argument's sake, let's go back and just have a look at this one, right? Just have a look at this. Okay, now, this may not work. I'm just doing this on the fly. No, there wasn't anything really there. So, is this pivot important? Well, I don't know. But I will say this: you've got to be careful about just going, well, I'm just going to use this pivot because it lines up and it makes the picture pretty. Okay, and you've got to be very careful because that's just confirmation bias. That's just, you know, drawing things up to see what you want to see. So you've got to be very mindful of that. So I would shy away from that because there's enough here for me that's just telling me like this is, you know, this is your area. This is $2,200 to $2,230. Like, what more do you want to see? You can just see how this is lining up. So what would be my expectation from here? Probably something along these lines, not as steep as this, but the same sort of breadth, but maybe just time-wise, it might take a bit longer. And you know, I don't know. I mean, that's projection work. But my expectation from what I see is that the market in gold is going to move lower, and it is a very good chance, the way it is set up, to make the 1-to-1 move down to this zone where it all ties together very, very nicely. Okay, just above the 50. Now, if that was going to be the case, then you might be saying, okay, well, what I've actually got here is a bull flag, and you know we're going to expect this to go on further. But so if you, whatever you're dealing with in terms of gold mining companies, you know, ETFs, what are you thinking about? I would just be mindful of this scenario playing out. I mean, you have to watch it, and the dollar's going to have a pretty big boost. But the way I'm looking at the US dollar at the moment is it's just back on the bid. So, you know, gold is likely to suffer. We're seeing Bitcoin starting to suffer. The metals, other than copper, are probably just in this corrective phase. Now, it doesn't mean that they're going to crash. Like I said, it just might mean that what we're getting here is the internal swing, the internal sort of and even, the Ellioticians will probably be going out going, okay, well, what we've got here is like a, and it's not unfair, but how they're going to label it is probably like an A, a B, a C down like that. Then we've got, for a bigger degree, so that, a bigger degree A wave or maybe an X wave come up here for a classic looking sort of 3-wave B, and then we're going to get some sort of impulsive third C wave coming down, and that will finish off the correction, and then we'll be ready to go on the next impulsive move like that. So look, I think it's probably a bit dangerous at this point to do this sort of projection, but is it not unfair to think, okay, if I'm thinking about a 1-to-1 move like the same way, is that going to put gold up to $26, $26.74, somewhere up there, a 1-to-1 going back the other way? Too early to tell, but not impossible. So look, I'll just leave it there for this week for gold. So that's just kind of what I'm seeing. That's what I'm thinking. So just be careful. Just be aware of this scenario. I don't know. Like, for all I know, next week gold's just going to go like that. I don't know. You get more Middle East tensions for all we know. There'll just be another crazy risk-off move. So we will see. But so far, it looks like it's playing to the tune. So that's where I sit with gold. Thank you for watching. Don't forget to like and subscribe if you like what you see, and I'll see you next week. Bye for now.